am Deidre Quinn, and welcome to Pending and Trending, a podcast that started in real estate and grew into so much more. Here, we talk about the power of building wealth, creating opportunities, and designing a life that lasts for generations. With expert guests and real conversations, my mission is simple: to help you elevate your journey and build the legacy you deserve. Welcome back to Pending and Trending. Today's guest brings a rare and powerful perspective to real estate, one that blends engineering precision, business strategy, and real-world investing at scale. Larry Mastropieri began his career as a mechanical engineer at GE and earned his MBA, has built an amazing career as both a top-producing broker and high-level real estate investor. That unconventional path has helped him identify wealth-building opportunities most people never see. Beyond transactions, Larry has built multiple streams through media and market intelligence. He's the co-host of the Real Deal Investing podcast, founder of Discover South Florida, and the voice behind Real Estate Market Watch, delivering daily housing market analysis. At the core of everything he does is one powerful belief: being both a broker and an investor doesn't divide his focus, it compounds his advantage. Larry, I'm so happy to have you on here. Welcome to the show.
Thanks for having me. Happy to be here.
Yeah, so at the core of everything that you do, my understanding is that you have one powerful belief, and that's being both a broker and an investor doesn't divide your focus. It actually compounds your advantage. Do I have that right?
That's valid. That's why I left the engineering world to be a broker, so I could have those synergies. Yeah.
That's great. So why in your belief does choosing both paths beat picking one lane?
Yeah, it's a good question. There is moments where if you dedicate your energy to just one thing as an investor, that could be helpful. But I think if you really focus on this, really boil it down, if you go the investor route and you become solely an investor, you're either raising capital from people, right, to fund your investments, because you're not making your own money really at that point, unless you're independently wealthy, and then that's a whole different discussion. But you're still raising money and you're making money on investing. So that's your job. So at the end of the day, my personal philosophy is for anyone is just get really good at making money, earning money. And then once you're doing that, you can go ahead and invest that money. And so whatever you choose to earn your money on, great, but you have to make money you have to have a job, you have to run a business. And being in the real estate business and investing in real estate just creates so many synergies. One, deal flow. Two, you are dealing with other investors and learning from them, and you're working with them and solving problems that maybe you didn't have, but it's helping you not have a problem in the future because you've learned before you ran into that problem. So there's just so many synergies when it comes to just making your money from being a broker and then taking that money and investing it into real estate.
Makes sense. Yeah, it makes sense. Although I find that many brokers get stuck in their wheelhouse and get stuck on the hamster wheel there, and they actually don't do that. So that's great that you do. So let's talk a lot about how you actually do your investments and how to identify the market's positioned for appreciation, and perhaps deals don't have to cash flow day one, but they appreciate over time. Is that the way you approach it?
Yes, that can be a reason to enter a position without question. I would say this: there's some balance usually to be struck between the two, cash flow and appreciation. And I feel most comfortable in between. So there may be markets, and we interview a lot of guys on our Real Deal Investing podcast that are in markets that are earning 15% cash on cash returns. And that's awesome. But their appreciation is very questionable. And so in South Florida, the appreciation is the driver, usually for most people. And the cash flow is basically non-existent, just like other major cities around the country, right? And so the full bet on, if I buy this, it'll be worth more tomorrow, but I'm not making any money. In fact, maybe I'm spending money to own this thing to make that bet. That doesn't make me feel great. And then on the other hand, it's, hey, I may buy this thing and it may kick off 15% cash flow, but it might not be worth what I paid for it tomorrow. That also doesn't feel great. So we've tended to find positions that are somewhere in between that, where there is decent cash flow or some cash flow, and the appreciation is also there as well. And so what we say is we like to invest in markets where if everything goes according to our thesis, if we get lucky, then this thing's going to be amazing. But in the meantime, we're kicking off acceptable levels of cash flow, and we expect annual increases in that cash flow. So,
Sure. So how do you identify and determine if a property is going to appreciate in the length of time that you want it to?
yeah, it's there's a level of speculation there, right? Of course. I think this goes back to the synergy of being a broker. So if you're transacting in a market all the time, you're seeing all the little nuances of development or what might come here or what's happening over there. And so when the opportunity presents itself in a market that you're very comfortable with, very familiar with, that you're dialed in all the news, and maybe you even know a lot of the developers. For example, in our area, we broker a lot of deals to the developers. And so we have some sense of what they're planning to do, what's under construction, et cetera. And so you get that little tip early on that this might work in this market. And so when you see something that works from a in-place measurement, like a cash flow in place, then and you see that there's this opportunity from all the data that you've been collecting as a broker, you can feel more comfortable making that call. That's why most of the time, until recently, we haven't really invested outside of our core competency as far as geographically goes. So recently we've expanded a little bit, and then again, it's just a bigger lift. So if we move into a new market, say we move into Fort Pierce as an example for workforce housing, we've done a ton of homework. We've been very thoughtful about it, and maybe we bought in very cheap. So maybe we got the cheap, unique opportunity that drove us to that market. And so it's almost like it's going to work, even if the market doesn't appreciate well. And then we build around that. So we own stuff in Fort Pierce now. We own stuff in Titusville now. These are markets that I otherwise didn't really know super well before we started our analysis, but we've bought in at a good basis and at scale to a degree. And so we've created a position where we'll just build around this now. And maybe we can lean in more on the next deal because we understand the market better. We understand what the rents are. That's a big piece of it too. In workforce housing, you don't always really know what the rents are. It's not super public information.
So how do you go about finding that out?
Boots on the ground research, right? So there's a ton of mom and pop landlords usually all over the place. And you're looking at the MLS for starters. You're looking at apartments.com. You're calling signs for apartments in the street. You're talking to some of these landlords because you end up getting connected to them through different avenues. And then you try to formulate your own opinions based on all that. And you have to be realistic. And a lot of investors like to get caught in that optimistic belief because they really want to do a deal and they want it to work. But if you can stay unbiased, it's very helpful. And I think that's what me and my business partner have done very well. We're probably more pessimistic than we are optimistic. And I think that helps us usually not make mistakes. Yeah.
Now, you mentioned your business partner. Speaking about, do you have one business partner? You have other partnerships, and how do you determine your partnerships?
Yeah. On the multifamily investing side, I have one buddy / business partner, grew up with him. He's a big real estate guy in Manhattan, just so happens to be. And him and I formed a partnership well before we were where we are today. And we've basically been 50-50 in that business. And that's pretty much all we'll do. We're not bringing in other partners. We're not doing other JVs. As we find opportunities, we typically take them down. We always take them down ourselves. We haven't done anything with anyone else. And then on the brokerage side, it's my brokerage. There's no real partner except for my mom has been a realtor forever, and she's been a great resource, and I owe a lot of where we are to her. Yeah.
That's great. So now, do you work with your mom to this day? Are you the same brokerage? Yes. Okay.
Yeah. So mom has been a realtor forever, and even when I was growing up. And so at some point we joined forces, and then we created the Mastropieri Group. And initially it was just me and her selling real estate. And then we got an assistant, then we added a couple agents, and then we added a couple more assistants. And so now we have about 10 to 15 staff in the office and 10 agents on the team. And so we're like this small teamage system that where the business generates all the leads and then the agents just crush business. That's their job. They answer
Okay.
the phone and they're good at sales, and they're very focused on one thing, as you mentioned, which is selling real estate, understanding their product. That's it. They're not marketing. They're not doing anything else. They're just selling real estate and being really good at that. And that's a model we've built.
The model. That's great. That's great.
Yeah.
Now that's been working well for you as a brokerage model, I understand. And you've implemented a lot of other avenues now as well. I understand that you have a podcast. Is that right?
Yeah, more than one podcast. Yes, we do
Okay,
a.
wonderful.
Yeah, so I do a podcast with a local real estate attorney. We call it Real Deal Investing. He has a relatively big portfolio, very sharp guy, and a deep network, just like I do. And so we basically bring on individuals who are interesting to us, and we just talk to them and we learn a lot. And there's so much to be learned just from hosting that podcast, let alone for the audience. So that's been great. And then we do a weekly YouTube live, which I guess you could call a podcast. And basically what we do on that podcast is we talk about the local market. And this goes back to the comment, like, how do you really know what's going to work or what's going to appreciate? And this podcast or this YouTube live every week really helps me get super sharp, because I'm forced to talk about 7 topics. We have a producer that helps us pick out these topics about what is affecting real estate in the area, whether it's local development or a new law or whatever. We're talking about that every week, 7 topics, and really diving into those and answering questions from the audience, et cetera, and just working through it. And after you do that for years, you tend to be a little dialed in on what's going on around here.
Yeah, so that's great. Let's dig into that a little bit. So you have a producer, but they help you narrow in on your topics, and then you research that topic before you record. Do I have the flow of that right?
Yeah, it's like a combined effort, right? Producer
Yep.
may source ideas or concepts. I may source ideas or concepts. I have a co-host who works on the Mastropieri Group, and he's on the podcast. Any of us could throw ideas out. We meet, we have an ideas meeting. We choose 7 of the topics, one for every day of the week, and then we all develop a little bit of a input into the research. Right. And then from there, we jump on the podcast and we talk about what we've learned. Maybe we dig deeper. Maybe I call a local resource and ask them, hey, what's going on with this? I know you're involved in this project. I know you're the attorney that's representing the developer, et cetera. Can you comment? And so we might get some feedback from them. And then we jump on the podcast and we do our thing.
Which is amazing, because then you are making so many connections on one side. And in addition to that, you are learning so much and so knowledgeable about your market, because you do that in your current market. Is that right?
Exactly. In the current market.
Yeah.
So it's called Discover South Florida is our YouTube channel, and where we host the YouTube lives. And it's all about South Florida, primarily focusing on Palm Beach County and Broward County with some focus on Dade County, which is Miami. And so there's just so much to talk about in those 3 counties, the Tri-County area in South Florida, that you could do probably a podcast every day if you wanted to. Yeah.
For sure. And I actually, before the show, I was listening to some of your recordings and going, wow, there's a lot of news from Florida real estate in headlines right now. You tune into some of what you're saying and you're like, okay, yeah, that makes sense. That really makes sense. Do you get a lot of business from an investor standpoint and from a brokerage standpoint from simply doing your podcast?
It's a great source of interaction with people who are interested in real estate in South Florida. And so, yes, we do derive top of funnel business, middle of funnel business, just from that credibility building.
Right.
We send out an email every week with those 7 topics and a video associated with each topic. And so we get a lot of feedback from our past customers, people who are just in our world that are converting. So yes, it's effective. It's very effective. Yeah. It takes time. This is not something that like all of a sudden works overnight, right? So
for sure, and the podcast takes time, and like all the things that you're doing take a lot of time, but it certainly makes you super knowledgeable in your market. Because I know that our listeners will want to know, can you just give us some insight into your Florida market? And one of the things that I was listening to, you were talking about fees, and you were talking about insurance, and you were talking about some different things that play into that. Can you just kind of I think everybody always like dreams from the north here of moving to Florida or having a second place in Florida. And is now a good time to buy, or what's happening in that market? So can you enlighten our listeners on that a little bit?
Yeah, that's a loaded question, but I'll take a stab
Yeah.
at it and hopefully give some valuable takeaways here. So, number one, we missed last quarter, but typically every quarter we do a South Florida market update where I inform about the trajectory of the market, where we are today, and give commentary. And so, stay tuned. That'll be coming out within the next week or so. We're working on that right now. And that's very detailed, very dialed in information. So if you care about the details, you'll enjoy that video that we post. And so the answer to the question is, where's the market today? The market is healthy. It's not bad. It's not great. It's not what it was in 2021 from a seller perspective. If you were a buyer, you probably hated it in 2021, right? On average, prices have softened in South Florida. So that is a thing. We've seen most of the core metrics revert back to pre-COVID numbers. So pre-pandemic numbers are what you can expect as far as days on market. You're sitting somewhere in the 80s, 90s days on market in South Florida. Absorption rate is somewhere around the 6-month absorption rate. So a neutral market is what that would be. And then it depends on asset type. We can go through that. Now, obviously, price is still substantially different than it was in 2019, but price has softened a little bit. And I don't expect the price to continue to soften much more. In fact, it'll probably stabilize. It feels like it's stabilizing right now. This is like a non-data comment. This is anecdotal. It's like the market feels pretty decent right now. And this is our stronger season. It's January, February, March, April, and May starts to soften. And then as we enter the warmer summer, it slows down. So it's a little different from other parts of the country where it's flipped.
Right.
So that's something to keep in mind. But during our season, inventory goes up quite a bit. So does the buying volume. So buyers show up during this season. So we're seeing things get done that otherwise were struggling a little bit to get done a few months ago. So that's net positive there, I think, for the market in general. So I think it's in a place where it's not perfect for buyers, not perfect for sellers. And it feels relatively fair, which is sometimes for a realtor slightly painful because you're never in a situation where you're on the side of the fence that it's just like easy street, right? So that was 2021, where us as listing agents would just put a house on the market, we'd sell 3 a week, done, keep it moving, and it was no problem. And so that was great if you were a listing agent during that time. Now it's back to 2019, 2015 to 2019. It was always somewhat painful to buy or sell. Like it wasn't easy. It was never easy to buy or sell is what I say. And so we're back to that. It's not easy. Now, if you do have the perfect home, those things move, right? If you check every single box. And now if you're in the condo market, that's a little bit of a different topic, right? The condo market's softer, much softer. And that's because of so many other things that I can ramble on about, but I'll leave it. I'll let you continue your questions.
Yeah, no, I think that's super helpful, and I get it. The condo market's going to be completely different because you have so many different variables and regulations and different costs playing in there. So I think that's super helpful for the people up in the north, especially that are considering buying a place in Florida and considering doing that, and perhaps whether it's now or maybe in the hot summer, it's not such a bad time to buy, right? Maybe you could take advantage of something in the hot summer.
There's always opportunity in South Florida. There's not like one moment where I can tell you, hey, this is the unique moment to strike if you're a buyer. There's so many different economic forces playing down here. You have people relocating for tax advantages. You have people who are local playing the tax advantage game, whether they're cost segregating, 1031 exchanging, et cetera, et cetera. Then you have people that are moving money from Latin America or Europe or other places and parking it here for security or for other reasons. And then you have just the normal, hey, I'm moving to get my kid into school before the year starts, or I'm downsizing, or I just had a kid and I need to buy a new house. So you have all these things happening in the South Florida market. It is very dynamic. And so it's very hard to predict that perfect moment. But so you just got to be in the market. You got to be looking for your opportunity. And when you see it, you strike. That's it.
Very good. And perhaps connect with a professional such as your group and listen to your Real Deal Investing podcast, find you on Discover South Florida, and listen to your Real Estate Market Watch, and they can learn a boatload of information from you, right? So if someone that's listening is perhaps a strong entrepreneur, a strong agent, but not yet investing, what's the first strategic move you'd recommend they make this year?
Yeah. So if you already solved the make money conundrum, then it's time to move on to the how do I invest? And you can do that in parallel while you're figuring out how to make money. But once you start making money, that's when you really need to think about investing. There's a lot of people out there that want to invest, and it's tough with that without making money. So you really should focus on build your business, make money before you start getting distracted, in my opinion. That's what's changed my life. Figuring out how to build a business that makes money, and then I go do that. And then, so I guess if you're in that phase of investing, there's so many different ways to think about it. But the one thing that I'll say that I get called about quite often is from friends, from family, from other people that are just looking to buy real estate and have this idea, they're getting started. I think if you're going to become a real estate investor, you got to think of it like you're building a separate business. What I mean by that is you're not just buying one investment property. That's number one, it's boring, right? But number two, it's one investment property is not going to change your life. And at some point you're going to look at it as a headache more than you are going to look at it as a real source of income or growth. Yeah. So if you're going to just like dabble in something, I'm not really pro go do that. I'm pro go figure out how to put it in something very simple. Then if you're going to dabble, go put it in stocks, bonds, ETFs, whatever other easy thing you can do. And so you need to get real serious if you're going to be a real estate investor. You need to say, I'm scaling to 100 properties or whatever the number is, 10, 15. You have a plan, right? And if you have that plan, then let's go ahead and let's talk about buying real estate. But otherwise, in good conscience, I just can't. I get this call all the time. Hey, I want to buy an investment property. Let's talk about why do you want to do that? Because you saw it on Instagram and YouTube, and because you hear that I have 130 apartments. This isn't easy. It's not easy. It takes a lot of work, and a lot of these gurus online don't want to tell you this, and a lot of realtors just want to sell you houses. I just think you need to really think about that. So I would say educate yourself, build a strategy and a plan, and be ready to build something substantial, because one doesn't solve for what you really want, most likely, and it usually creates more problems than it's worth long term. So
that's great advice, Larry. That's really great advice. Is there any last piece of information you'd like to share with our listeners before we sign off?
No, I think that's it. Okay.
Thank you so much for being on. I appreciate it. Today's conversation with Larry Mastropieri is a powerful reminder that wealth isn't built by choosing one lane. It's built by designing systems that allow multiple strategies to compound together. Larry showed us that when you combine brokerage income with long-term investing, data with intuition, and content with community, you don't just create transactions, you create leverage, access, and optionality. His journey from engineer to investor to market authority proves that patience, systems thinking, and strategic positioning outperform hustle every time. If this episode changed the way you think about cash flow appreciation or what's possible in your own business, make sure to check out Discover South Florida and tune in to Real Deal Investing Podcast for unfiltered conversation on what's actually working in today's market. And if you took one thing away from today, let it be this. Stop trying to pick the perfect path and start tracking the right ones. Thank you all for listening, and we'll see you next time on the show. Thanks for tuning in to Pending and Trending. Remember, generational wealth doesn't happen by accident. It happens by action. If you like today's episode, share it with a friend, subscribe, and let's keep elevating your journey together.